Good morning, folks. My name is Curtis Chandler, president of PFL. We hope that everyone enjoyed their long weekend, and we hope that you are enjoying our early morning briefing. We are live 7 a.m. Eastern every Monday. If you are viewing this podcast through our report and are up at 7 a.m. Eastern, please tune in next week live instead. Please like us and follow us on LinkedIn and pass on the good word. We would certainly appreciate it. And you could win a PFL Railcar. Our quote this week is from Confucius. Confucius was a Chinese philosopher and politician of the spring and autumn period who was traditionally considered the paragon of Chinese sages. This guy lived 500 years BC. Confucius once said, "The man who moves a mountain begins by carrying away small stones." We, of course, really like this one, folks. It makes a lot of sense. You can't move a mountain all at once. You can't build a company overnight. You have to start somewhere. Reminds me of other similar quotes such as "one day at a time" and "one brick at a time." Bottom line, don't get frustrated out there, folks, and start small and move that mountain. New U.S. jobless claim for the week ended February 6 was 793,000 versus 760,000, which was expected, and a revised 812,000 for the prior week. Continuing jobless claims for the week ended January 30th was 4.5 million versus the 4.4 million expected and revised 4.6 million during the prior week. By state, some of the most populous parts of the country saw encouragingly large drops in unadjusted new claims last week. Florida, by far, the greatest decrease, with unadjusted initial jobless claims dropping by more than 51,000 last week. And on the other hand, California saw another surge in new claims, with these rising by more than 23,000. The Dow closed higher on Friday of last week, up 27.7 points, closing out the week at 31,458.4 points, up 310.6 points week over week. The S&P 500 closed higher on Friday of last week, up 18.45 points to close out the week at 934.83 points, up 48 points over week. The Nasdaq closed higher on Friday of last week, up 69.7 points, closing out the week at 14,095.47 points, up 239.17 points week over week. In overnight trading, Dow futures traded higher and are expected to open up this morning 215 points. Optimism for a recovery in oil demand as COVID vaccines are rolled out while producers rein in supply has pushed the market structure for Brent and U.S. crude into the deepest backwardation since the start of the pandemic. Backwardation means the current value is higher than prices for later months and encourages traders to draw down oil supplies and sell promptly. Brent backwardation was in its deepest level since 2020 of last week and is $2.80. The structure encourages financial investors who have large positions and makes it cheaper to roll over monthly contracts. As a result, prices hit its highest level since January of 2020, closing at $60 per barrel by economic curbs and OPEC production cuts towards more economic stimulus, while it closely watched jobs reports confirmed the labor market was stabilizing. WTI for March delivery closed up $1.23 to close at $59.47 a barrel, up $2.62 week over week. Brent crude for April delivery rose $1.29 a barrel to close at $62.43 a barrel, and that was up $3.09 week over week. U.S. commercial crude inventories decreased by 6.6 million barrels from the previous week at 469 million barrels. Crude oil inventories are 2% above the 5-year average. Total motor gasoline inventories increased by 4.3 million barrels last week and are roughly, or they're 0% below the 5-year average for this time of year. Finished gasoline components and blending components inventories both increased last week. Distillate fuel inventories decreased by 1.7 million barrels last week, 7% above the 5-year average for this time of year. Propylene inventories decreased by 4.5 million barrels and are 9% below the 5-year average for this time of year. Total commercial inventories decreased by 11.2 million barrels last week. U.S. crude oil imports averaged 5.9 million barrels per day last week, a decrease of 700,000 barrels per day week over week. Over the past 4 weeks, crude oil imports averaged 5.9 million barrels per day, which is 12% less than the 4-week average last year. Total motor gasoline imports last week averaged 657,000 barrels per day, and distillate fuel imports averaged 356,000 barrels. America rail volumes were up 2.1% year over year in week 5, resulting in year-to-date volumes that are up 3.9% year over year. 5 of the 11 major traffic categories posted year-over-year increases, with the largest increases coming from intermodal at plus 6.5% and grain at 22.8%. The largest decreases came from petroleum at minus 20.3% and non-metallic minerals at minus 13%. North American rig count is up by 10 rigs week over week. The U.S. gained 5 rigs week over week. Oil rigs were up 7 to 306, gas rigs down 2 to 90, and miscellaneous rigs unchanged at 1, according to Baker Hughes. U.S. currently has 397 active rigs. Canada's rig count was up by 5 rigs as well, week over week, and Canada's rig count is 176 active rigs. Year over year, we are down 472 rigs collectively. A few things that we are keeping our eye on. We've been watching extreme weather, folks. Extreme cold is gripping the plains in the Midwest this week. Numerous daily cold records will be shattered this week. The cold has taken its toll in Texas, where rolling blackouts has left more than 3.5 million homes and businesses without electricity as of late Monday afternoon. Expect rail traffic to be impacted. PFL has already received notices and warnings from a number of Class 1s. The weather has created havoc on the energy markets. Spot natural gas prices across much of the western U.S. surged to record highs on Friday of last week as extreme weather fueled demand and stretched supply to its limit. In Kansas and eastern Arkansas, hub prices were trading as high as $300 per MMBTU. Not only did natural gas prices rise to historical levels, but electricity prices followed suit, with ERCOT reaching over 11,000 per megawatt hours, reaching holy shit levels according to a trader. With any trading environment, there will be winners and losers, and some losers we're certainly going to see in the coming days. For more detailed localized pricing information, see PFL's just released Railcar report. The good news is the weather's going to break next week, and we should have back to normal weather. Petroleum by rail. The 4-week rolling average of petroleum carloads carried on 6 of the largest North American railroads fell to 27,492 from 27,282 the week prior. Canadian volumes were lower on the back of a tighter basis market. CP shipments fell by 17.9%, and CN volumes were down by 1.2%. U.S. railroad operators were mixed. BN had the largest percentage loss, down 3.9%, while the UP increased by 9.7%. We are watching DAPL that is still threatened by a pending shutdown. A hearing that was supposed to have taken place on whether to shut down the 570,000 barrel a day pipeline involving permitting issues was delayed yet another 2 months. The U.S. Department of Justice and the Army of Corps of Engineers requested a continuance to April 9th so that the officials in the new Biden administration could be briefed on the case and the litigation surrounding it. DAPL moves back in crude to Illinois, then southward to Texas, and the Standing Rock tribe wants it shut down, saying the Army Corps of Engineers missed a key study for pipelines and spills. In other pipeline news, according to Enbridge, on an investor call on Friday of last week, its Line 3 expansion is well underway and expected to be completed this year, albeit at a cost. Enbridge expects costs to come in 13% above initial estimates due to delays and legal fees, but higher volume throughput and lower than expected interest rates will compensate for the higher expenditures. Folks, we have a few other items that we are watching closely that are detailed in today's rail report, including an analysis on intermodal traffic and crude by rail out of Canada. My IT guy said I had to cut it off short today because I'm going to lose the viewer's attention span. What do IT guys know? Well, in any event, folks, that's all for this week's podcast. We hope that you have a great, safe week, and we look forward to seeing you next Monday. PFL has been extremely active in storage activities, a lot of leasing going on, a lot of troubleshooting as far as return on lease goes. We're here to answer any questions that you may have. Please feel free to contact us by telephone at 239-390-2885. Have a great week. Until next time. Thank you.